Want to get so rich trading, you don't know what to do with the money, want to figure out the system that's going to work properly for you, then you need to come into the office with me today and come and check this out. Hey fellow traders, good to have you back. I'm going to talk to you today about how to get so rich in the stock market you won't know what to do with the money when you get older. It particularly works for youth, particularly works if you're young and you're a beginner and you're new in the markets. But unfortunately for you guys, this doesn't involve a trading system. This doesn't involve day trading or swing trading. What it actually is investing. And I've sort of looked at this over and over again, and I've done it myself in the past. And it's really important that, you see, as youth, you guys are looking for that instant gratification all the time, that instant success, and you want to day trade. So you want to trade on the 5-minute charts, you want to trade on the 1-second charts, you want to trade on anything that's fast and quick. But if you really want to make money in the long run, this is going to help you over time. And when you look back on it over a period of time, you're going to be so happy if you did this. But first, remember, trading is a 50-50 game. 50% of the time when you take a trade, it might win, and 50% of the time when you take a trade, it might lose, no matter what your system or no matter what your edge. Trading is risky. 80% of traders will lose money. And if you don't like risk and you don't like losing money, you most probably shouldn't be trading, and you should walk away right now. That said, go down to the blog every single day. There's a trade idea there for you, and it's totally free. I'm not asking you for anything for it. It's just an idea. It's not trading advice. Go down, check out your trade every day. It always helps to see what somebody else is doing. While you're there, pick up your free Forex book. It's in the index. Obviously, it's in the description here, and it's free. And that Forex book is there for you, and you can enjoy it. It'll help you with your trends and things like that. It's great. It's a PDF. So now I'm going to show you an easy trading system, and then we can carry on talking about the investment system. And I can tell you now, time in the market is probably better than our trading systems. So the first thing we do is we go to the higher time frame to look for our support and resistance. We're on the US 500 just out of interest's sake. Now on the US 500, if I put this on a line chart, I've got a clear support level lying right in here, which we're going to use. So there's a nice support level. Could be a resistance level as well if you're below it. If it goes through this, it becomes a resistance. But for now, it's a clear, nice support level. What are we going to do with a support level? Well, quite simply, we're going to go back to the candlesticks, because as you know, the candlesticks tell you a lot. They're like a little book that you read. The green bars, the red bars, the tails behind them, they show you pincer tops, they show you double tops, triple tops, they show you where the market's going. They're very important to your trading. Take this down to your lower time frame that you're trading on. Maybe it's 1 hour, maybe it's 5 minutes. We're going to look at the 4 hours because it's easier for me to map this out for you and show you, why have I got that? Show you what's going on. Easier for me to draw the chart out. There you go. And then I can show you exactly what you need to do. The big thing here, guys, is trading was really hard until I figured this little strategy out, which is draw the trend line in and just see where the trend line comes out and what it's telling. Trend lines can be incredibly useful to your trading. What I'm going to do, I'm just going to take this trend line and just move it around a bit because it's messing me around just a little bit here. And I'm just going to draw another one in a little bit higher and at a little bit of a different angle. Now, the reason I draw this trend line in, two reasons. One reason is to see which way your trend is, but the other is it doesn't have to be perfect. It should be on 3 closing prices and all the rest of it. But what it's telling me is this is in a downtrend, and if I take the long trade out of here, I'm looking for a recent support level and a recent resistance level. And the most recent resistance level on the 4 hour, or even a supply level, is in this area. You see how that sits nicely in there? So if you take this trade and it comes out of this main support area, when it comes up, it's going to hit this resistance. This is a really important topic, because if it goes through the resistance, it becomes a support, but it might just bounce back down again. This trend line that you draw in here, it's just for confluence. It helps you to understand, because you've taken your main support area. This is your main support area. You've grabbed that off your higher time frame, but now you're on your lower time frame, and on your lower time frame, it's showing you there's another resistance which has put itself right into this spot. And if you don't believe that, look left. Look left. look left. See all these areas? There's an area here which is quite important. The next area from here is all the way up here. This is the supply area and it's all the way up here. So if it breaks through, that's absolutely marvelous, because if it breaks through, it'll break through and it'll carry on going all the way up to here, and it'll probably bounce off of there. But then you've got a new area growing above this area, and you would be looking at a completely different trade. So like I say, watch out when you're trading, because a lot of people won't see this and they won't see this. They'll only see the main area at the top here and think that's where their target is. But actually, if this bounces out of the main support area, there's a very, very, very good chance that it's going to run into this resistance here. And you'll see in here, there's also a nice little demand right here where I've drawn the area, because I just look at the picture, I don't look at the lines, and you can see it'll bounce out of that demand area and go straight up into there. So watch out for that when trading. I mean, like I say, support and resistance didn't work properly, or doesn't work, unless you understand these little qualms that come into your trading. You have to watch out for these little things in between everything. They're quite important, and it adds to your confluence when you're trading. If you need to know more, let me know. How do you manage your risk? How do you manage your risk on this trade? Very simple. Just put your stop loss just below this area, or this lowest low. Move this down a little bit and take your stop loss a little bit further down. And that'll be your trade. Quite easy. So if you put your stop loss below that low or above that high, whichever way you're going, then you'll be away from all the money that's waiting, or the orders that are waiting in this area. So that's the best way to trade your support and resistance, or to make trading easy for you. So here's the thing, guys. If you want to really get rich in the stock market and you really want to make a lot of money, all the guys that have been successful over time have not been day traders and stock market guys and whatnot. They're the Warren Buffetts of the world and these types of guys. What they do is they invest. Now, what you got to do if you're young is take 5 shares, take 10 shares, good dividend paying shares, any 10 shares. Try and put them in different markets. It's always good. Try and buy them when the market's corrected, because obviously it's going to be painful if you buy them at the top of the market now and tomorrow the market goes down and your shares go down and you're looking at your portfolio and saying, well, I had $1 million, now I got $500,000, and it's going to make you feel bad. But the idea is to buy these shares and then not to look at them and not to worry whether they go up or down. Just buy them. They're dividend paying shares. Dividend paying shares that will pay you between 6 and 8% per annum. That's what you're looking for. Good shares, good companies, strong blue chip companies. Now, what you do is every month, you take a little bit of your money that you're making, whether you're making it on day trading or swing trading, or whether you've got a job, whatever the case, take a little bit of that money every single month and just pay it into that share account and buy into one of those, or just keep on buying into those shares, whichever ones. You've got 10 of them, so buy them in a row if you want. Just say, this month I'm going to buy number 1, next month I'm going to buy number 2, next month I'm going to buy number 3. Take a couple of $100, $500, $1,000, whatever you can afford, depending on your income and how much of your income you can put aside. Within 10 years, you won't need to work anymore with those dividends. Within 20 years, you won't know what to do with the money. Believe me, it'll be psychopathically huge amounts and sums of money coming into your account. But the point of this game is patience. You're going to have to be patient. You're going to have to be relaxed about it, and you're going to have to look away, because there'll be times when those shares take a dip and there'll be times when those shares go up. But over time, with inflation, with everything, the value of those companies will go up. The main thing to do is to keep one eye on the companies, just in case one of them starts to go down the toilet for whatever reason, or starts to have a problem. You don't want that situation in your business where one of the companies goes bankrupt. So keep an eye out for that. If a company starts tanking, starts going bad, or starts looking like it's not going well, or the news is against it, then I would rather sell up those shares no matter where they stand and take that exact amount and put it into a different company. It's no big deal. Even if it's losing, just take the exact amount and put it into a more profitable company. Just shift it over. You've still got that investment. Whatever loss you're taking or profit you're taking, it doesn't matter. You've still got that investment. At least you know it's in a blue chip company that's going to go positive and pay you your dividends. Also, if a company stops paying dividends, dividends, if it's like no longer able to pay you those dividends, that's a bad sign, and it might be a good idea to sell out of that company and put it into some other investment, another company, and something that's going to go in the right direction. Remember what I said, don't buy them now at the top. Don't run out there tomorrow and buy these shares, because the markets, I don't know if you've seen the stock market, look back over the market for the last 90 years. You'll see it's been on a constant up, but there's been a few where it's been at the top and then it's dipped down. And if you look at it right now, it's right at the top. So there's a very good chance there's going to be a large correction and a dip down. A correction, normally 10 to 20%. If it goes down 10%, you can start looking to start getting in, and you can start looking to buying into the market. That said, so we're at 5,300 odd now on the S&P. If it starts dropping down into the 4,000s, you really can start looking to start buying your shares, whichever companies they are. So choose a tech company, a bank, or this or that, the other. Get some different ones in there. Get good ones, get good dividend paying companies. Guaranteed, guys, long run, you're going to look back on this and you're going to be, hey, thanks dude, that really worked for me. You'll be surprised how much money that can make you. You'll have a couple of million. If you just take, you can put a basic amount in now, and if you just take $500 a month and put it in there, you'll be surprised. You'll have a whole bunch of money you won't know what to do with in 20 years time. So guys, that's just a little bit of my idea to you. Hopefully it helps you. And hey, thanks for watching the video again. Don't forget to watch the last video. Till next time, cheers. Bye.